with each of our lenders to hear all about their value propositions, products and niches. This is also a great opportunity to ask questions, so make sure you're paying attention and we'll do our best to answer as many of them, if not all of them, throughout the session. Before we kick off, we'll run through some housekeeping to ensure we stick to time and minimise any technical interruptions. Firstly, please keep your mic on mute to avoid any feedback. We also ask that you turn your cameras off during this session to minimise disruptions. Please use the chat box to submit any questions you have. As promised, lunch is on Aussie today. If you haven't already received your Uber Eats voucher, please reach out to Maddie, and the email address is on your screen at the moment. Finally, our lenders are more than happy to have discussions with you offline. So if any questions are left unanswered due to time or require more detailed conversation, please don't hesitate to reach out to your BDM. We also have Nicole online who will be capturing all questions. Any unanswered questions will be relayed to the appropriate BDM. With that, we'll get straight into it, and I'll throw to Jaden from Allianz.
Beautiful. Thank you so much, Nathan. Hopefully you guys can hear me okay. Yep.
Yeah, mate. All good.
Beautiful. So, first of all, thanks so much for putting on such a great event. Appreciate the lunch as well, Nathan. As you can probably tell, I am not your regular BDM, so Bernadette is normally the one that looks after Vic. However, I'm filling in for her today as she's off today, so I look after the New South Wales network for Aussie. So, to get into it, I've just got a short sort of 10-minute spiel that I'd like to cover. So, if we go to the next slide. Yep, next slide.
Right, sorry, mate, try.
Yeah, no dramas.
Next again.
Yeah, go next again. Beautiful. So, guys, to kick things off, you know, our relationship with Aussie has just hit the 5-year mark. So, you know, so far so good. The relationship that we have with Aussie is what we call a spot and refer model, or essentially a fancy word for tick and flick. In a nutshell, the products that you can offer through Allianz is your home and contents, your landlord, and your car insurance. Now, I just wanted to highlight some of the unique selling points that we've got that are solely available to the Aussie broking network. So, you know, a lot of the time I get asked, you know, what's the difference between, you know, me referring and my customers going through Aussie as opposed to direct, and this slide sums it up nicely. So first and foremost, we offer free building cover from exchange up until settlement. Now, I often get asked the question, you know, why does my customer need to be covered, you know, after contracts have exchanged? And there's a couple of answers to that, really, in the sense that, you know, in South Australia, Queensland and ACT, the purchase is actually legally liable for that property 5 p.m. the next business day after exchange. So keep that in mind. I know particularly a lot of New South Wales brokers, they're doing a lot of securities in Queensland. It seems like there's a max exodus of people bailing out of New South Wales and potentially Vic as well into those states, or buying investment in properties in those areas. So when you are doing securities there, keep that in mind. The purchase is legally liable for that property to 5 p.m. the next business day after exchange. It's completely free for the customer all the way up until settlement. If we could just stay on the previous slide, Nathan. Yep, beautiful. For the areas such as, you know, Victoria and New South Wales, technically the vendor's legally liable for that property all the way up until settlement, but we made it nice and easy. So, you know, it is a condition of settlement. You know, you can send it through, the customer is covered, you can make sure the certificate of currency is correct. So, you know, there's no delays in settlement. A couple of other things I wanted to highlight here as well is pay by the month at no extra cost. So that's a really, really strong benefit. Just to give you a bit of background about some industry standards, you know, they'll generally give you an annual price, and then they'll go, okay, if you want to pay monthly, there's a loading fee attached to that. That's no different to our direct channel. So if the customer chooses to pay by the month, it's actually 11% loading fee that the customer's paying. Through you guys, we waive that fee completely. So that's a really, really good benefit there, considering 90% of Aussie customers choose to pay by the month. Other things we do, you know, multi-policy discounts in terms of 10% discount when your customer combines home and contents as well. And then the automatic 30% no claims bonus. So, you know, what do I mean by that? You know, if you were to go through our direct channel, we ask the question, hey, have you had a claim in the past 5 years? If the answer is yes, they're not eligible for the 30% claims bonus. Through you guys, even if they have had a claim in the past 5 years, they're automatically applied to that. And then sort of two last things there. All of the guys that are, handling all of your referrals, it's all Australia based. So we've got a contact centre based in Queensland, based in South Australia. They're open from 8 a.m. till 8 p.m. There's actually 60 of them. They're a really, really strong team. Most of the time they've been with the business for a number of years. It's almost like a career progression path for them where they start off in direct, they move to the broking channel and they move up from there. So, rest assured that when you're referring customers across to that, they're talking to professionals that know what they're talking about. And then one last thing that's not on here that has actually become quite common, particularly with all of these catastrophic events, particularly the earlier floods in 2022, is this awful thing called embargoes. And for those that don't know what an embargo is, it's essentially we've got, I call them super weathermen, glorified weathermen, whatever you want to call them. Essentially, they wake up super early in the morning, they analyse the weather, and they analyse, what postcodes are at risk. If they determine a postcode is at risk, they'll essentially push pause on that postcode and say, hey, look, we can't sell any policies in this particular postcode. Particularly when the flood seasons was happening, often these embargoes would last a couple of weeks, delaying settlement. Pleased to advise through you guys, what we can actually do is we can bypass that embargo. So if the security is attached to a loan, let us know. And even if there is embargo in place, we actually send it to senior underwriting to bypass that. And there's been a few Aussie brokers where, it's been, time sensitive in terms of settlement and fees if they can't settle in time, et cetera, because no other insurance provider would offer them insurance in that. So keep in mind, if there's embargo in place, the security is attached to a loan, we can bypass that through the Aussie channel. So, next slides. In terms of how to refer, super easy. We've actually got two methods. So the first method is jumping into Toolbox. It literally takes 45 seconds. That one. Takes 45 seconds. All you need to do is go to the insurance tab, click on Allianz, select, who the primary applicant is, select, any additional notes. The interested party is very helpful for us because then, most of the customers, particularly with the Aussie product lines, I know, what have you got? You've got Pepper, Commonwealth Bank, and a few others. Having that interested party in the comments section really helps. And essentially, once you click send, the customer is going to receive an SMS notification saying, hey, Allianz is going to give you a call. If you'd like to call us back sooner, here's the dedicated number. And then from there, what we're going to do is continually send you updates. So, whether we, reach them via voicemail or best case scenario, we go ahead and sell the policy where you'll be sent the certificate of currency. That's method number one. Method number two is we've actually done if we go to the next slide, we've actually done a lot of work with Toolbox in allowing you guys to actually get an instantaneous price estimate. So similar to before, you can navigate your way to the insurance section, click on estimate, and essentially what will happen is it will grab the security details, it will make a bunch of assumptions and run it through our algorithm to generate an estimate price for the customer. So you can go ahead and generate an estimate price. If you click on get estimate, it's actually going to send a quote to the customer so they can fulfill online. What we've found in terms of best practice is actually doing both. So, you think about to send a referral, it takes 45 seconds. To generate an estimate, it's 30 seconds. Call it a minute 20, minute 30. It really increases your conversion rate. So the brokers that are performing the best, converting the highest, they actually do both. Because ultimately what you're doing is you're creating multiple purchase paths for your customers. So, one, you've got someone on the phone chatting through their policy, or for those more tech savvy customers that prefer just not to speak to anyone and complete online, they can do that through the estimate functionality. And yeah, guys, really to wrap up, super easy referral process. We do home, contents, landlord, and motor. Everything's integrated within Toolbox. And then for yourselves as well, we've actually got a 20% staff discount. So if you haven't used this before, feel free to refer yourself. Get a bit of a feel for how the process works, so that way you can understand, what the customer journey looks like. And yeah, that's really it from me. I don't know whether we got time for questions, but essentially I'll reach out to Bernie and get her to, send this pack across for you guys so you can have a look at, and then, feel free to bounce back any ideas from this.
Excellent. So thanks, Jade. We do have a couple of questions that have come through on the chat, if you don't mind. We've got a couple of minutes for you. First one's from Sabine. It's, are we able to change or update Linda's name in the COC?
Yeah, good question. So it actually happens quite a lot. So the customers will go, misspell it, or, particularly for Aussie white label home loans, they'll just say Aussie as an example. So yeah, we do give you the ability to be able to change that without getting the customer involved. So it's just a matter of, reaching out to your BDM or myself, and then we can turn that around generally within an hour with the updated COC interested party.
There's another one here, but it looks like Sabine has helped address it. But it's from Sahil. In many instances, I referred customers to Allianz Insurance, and they received lesser quote directly from other online teams compared to our referral.
Yeah, so if that ever comes up, bring it to our attention. What we find is, customers that go out and get their own, policy online or wherever it may be, they might not include all the features and benefits. Some insured might be different, the contents might be different. So in that instance, when that comes up, reach out to us so then we can actually compare apples with apple and ensure the client is adequately covered.
Fantastic, thank you. Eli's asked, if the claim is declined by the insurer, does that still register as a claim? So
that's a good question. So I think that's reverting back to what I was saying earlier through our, direct channel. They asked the question, have you made a claim in the past 5 years? In that instance, even if it is declined, the answer would be yes. But look, the benefit through Aussie, even if they have made a claim in the past 5 years or they've made a claim and it's been declined, we just simply don't ask the question and they're still eligible for that 30% no claims bonus.
Thank you. Anthony's asked, will the embargo be worked around with the fire prone areas?
With flood prone areas? Is that right?
Sorry, they were fire prone, this question, but flood does come up next.
Yep, yeah. So if it's in a flood prone area or a fire prone area and there's been an embargo put in place, the process is let us know. If it is attached to a loan, then we'll look to cover it so there's no delays in settlement. Of course, there are exceptions where the property may be already underwater or already been on fire. We're probably not going to insure that, but it's generally got a high success rate of upwards of 95%.
And the final question we have for you, Jaden, is around just flood insurance. Does Allianz include it?
So what we do is we make it optional for the customer. So we say, look, here's your price without flood. Would you like to include flood? And the flood proportion will be relevant to the risk associated with that property. So, as an example, a common misconception with flood, particularly in like Lismore and Grafton, where you've seen those catastrophic events, is, hey, our insurance provider doesn't offer flood. Allianz, we actually offer flood cover everywhere. However, it is optional. So, in Lismore, I think flood premiums are going to be relatively high because it floods every 5 years there, where in other areas it might be only a couple of dollars because there's never been a flood there. Yep.
Fantastic, Jaden. Really appreciate your time today.
No, thank you very much. Take care. Enjoy the rest of your day, guys.
Excellent. Thank you. Next, we have Jamie from Aussie Asset Finance. Jamie, are you with us?
If I take myself off mute, that might help.
Thank you.
Perfect. Thank you so much for having me along today to talk about Aussie Asset Finance. So I'll just jump straight into the first slide there. So wanted to quickly talk about personal loans. So for us, this has been a product that since we launched it to the Aussie network has gained a lot of momentum. Last financial year, it was about 34% of the overall settlements for the network. And it was about 31% of the overall settlements for the Vic Tas network. So it has gained a lot of momentum. For me, it was never a product that I loved, if you go back 4 or 5 years ago. But the last kind of 18 months, I've really jumped on board with the personal loans because I feel like there is a really good value add there. It also does have a really high conversion rate. So it is at about 37% from lead to settlement of all the leads that we do get through from the network. There are just a few quick facts for the Q4 last year. So debt consolidation and home improvement are still the top two loan purposes. We have started to see that switch. So it used to be home improvements that was number one, followed closely by debt consolidation. But heading into this financial year with all the interest rate rises in the current market, debt consolidation is now the number one purpose for all those personal loans. It is a good product with the debt consolidation piece because there's no limit on the number of debts that we can consolidate. We just need to make sure that it is under the maximum loan amount offered by our financiers, which for one lender is $80,000 unsecured. The rest generally cap out at about $65,000. We have had instances where we've managed to save the client about $700 or $800 a month just by doing a debt consolidation loan over 7 years. Because obviously, credit cards and those personal loans through a lot of the majors are sitting at 15, 16%. The average interest rate for the VicTaz portfolio for personal loans is about 8.9%. The average loan size is around $30,000, but again, VicTaz, we are a little bit higher in that regard, where we sit at about $32,000 as our average loan size. And majority of ours are actually home improvements. So with the home improvements, we don't need any invoices or evidence of what those funds are going to be used for. We pretty much just have to disclose to the financier at the time of submitting that application that it's going to be used for home improvement, and we don't get asked any questions or whether to provide any information. We had 192 brokers that have settled a personal loan. 92 of those actually came from the VicTaz network last financial year. So we do have a higher penetration with the personal loans than the other states there, which is a good thing that I like to hear. And the average loan term for us is 72 months. They do have no early repayment fees, so we tend to find that a lot of clients will take them out over that 7-year loan term because you can pay them down quicker and not be penalised for exiting that contract early. And at the moment, the turnaround time from lead to the client having those funds in the account, provided that we do have all those supporting documents ready to go, is about 48 hours. So it is an all online process. As soon as we've lodged that application and they've assessed the client's bank statements, which is generally only 90 days of salary credits, so, provided there's nothing untoward on the bank statements like overdrawings or dishonest, we are having the funds paid to that client's bank account in 48 hours. We have opened up the acceptable purposes as well. So when we first released it, it was really only for the older model assets that we couldn't secure due to age, home improvement, debt consolidation, but we've now allowed furnishings, weddings and funerals, medical, dental, and also education and travel. We still can't do top-ups for home loan deposits. That's not really a purpose that those financiers will entertain. But every other purpose, more than happy for you to reach out if there's something that you're not you're a bit concerned about. And then if we just kick to the next slide there as well, we have made some process improvements within the office internally. So we're always reviewing what we do and how we do it, just to see if there are tweaks that we can make to, improve the conversion for brokers, and also make it a better broker and customer experience. So from July, we are now reduced that SLA of as soon as that lead comes through that toolbox system, that client is contacted within 15 minutes. So we'll have our customer care team reach out to that client, book in an appointment time, within 15 minutes of it hitting our back-end system. We have also made some process improvements internally as well in the background of how we process an application. So what it does mean as well is our sales consultants and that direct point of contact for the clients, they are able to get through more leads daily now, which means that, if you send through a lead in the morning, I think it's about 60% of those leads are now contacted that same day. We have also changed our DMP process as well, which I'll talk through on the next slide as well. And we've also made changes to leads that are marked as future contact. So those future contact leads are ones where, the car's not ready. There may be something on the client's credit file, or we're waiting on them to hit a certain month for their employment. And it could even be that, there are some dishonors and overdrawings on their bank statements and we need to wait kind of 3 months. And then if we just go to the next slide there, thanks, Nathan. Big topic point and an area that we're spending a lot of time on with the brokers is this conversion piece. So here you can see in yellow the 3 main reasons why a lead doesn't progress through to an opportunity and then obviously on towards settlement. So the biggest one for us is could not contact. So that's, the leads come through, we've tried to make contact with that client to book them in for an appointment, but we haven't been able to get in contact with them at all. That's where we're trialling this 15-minute SLA as well, just to see that, if us contacting them within 15 minutes, we can get a hold of a high proportion of clients, because at the moment it's about 1 in 7 leads that come through from the Aussie network we aren't able to get a hold of. We do try them for 3 days in a row, so we will call them, we'll send them a text message and also flick them an email as well, asking us to get in touch. But 18% of those don't come back to us at all. So that's where we'll now be leveraging a little bit more off the brokers, especially if they're existing clients. So I myself, from a BDM perspective, I'll also be trying to reach out to the customer myself and see if I can get a hold of them, just to ascertain, the best time for us to make contact. But what we'll also be doing as well is just getting in touch with yourself as the referring broker, just to let you know that we haven't been able to get a hold of your client, and just seeing if you can also touch base with them from a relationship perspective to see, 1, if they're still wanting to proceed, and 2, the best time. And then that way we can just get it booked straight in with the sales consultant. The next biggest DMP reason is no client response. So that is where we've managed to speak to the client to take that basic application, and we're just waiting on information like driver's license, pay slip, signed privacy, to be able to move it from being a lead to a genuine opportunity and being submitted to that financier. So we'll chase them generally for about a week. We may leave it for a week or 2 depending if the client's gone, can you touch base with me in 2 weeks' time because I'm away for work or something like that. I'll also be following up with clients myself if our sales team can't get a hold of them. But we will also be using yourself as the brokers to try and push the clients to send those documents back to us as well, and just using it as a little bit of a check-in as well with the customer, just to see if something's changed or, they're not wanting to proceed. And then a big one for us that's jumped up, especially, with all the stock shortages and everything that's still going on in our world, is future contact. So that's where the leads come through. We've spoken to the client, but they're not ready to pull the trigger on moving to an opportunity because we may be waiting for stock. There may be a blemish on their credit file or bank statements, or we're waiting for them to hit the minimum tenure in their employment. So they'll now be put into a nurture queue. So they'll be put into a separate queue with the relevant follow-up tasks for our customer care team. And then what we'll be doing is, as soon as their future contact task does pop up, we'll just touch base with them just to see, if they're still wanting to proceed, recheck all their bank statements and their credit file, just to make sure that we can start to turn more of these into an opportunity. And again, obviously, settlement and conversion for yourself as the broker. But that's pretty much it from me. Again, if there's anything that you guys need, or there's any questions or concerns that you do have, I'm more than happy for you to give me a call, and we can work through it from there.
Thanks, Jamie. I'm just going to have a quick look in the chat and see if we have any questions for you. We've got I've got about a minute, so if you don't mind, do we have any Aussie branded brochures that we can provide to our clients to assist with explaining the service you provide, i.e. car finance, personal finance? That's from Andrew.
Yeah, absolutely. They are all downloadable in Aussie Chatter, but I can also circulate those flyers that we do have available.
Baha just has a question around rates.
Yep, so the rates are purely dependent on the client's credit file at the time of applying. So they do, for a high credit scored client, at the moment they do start, there is one lender that's offering 6.95, but the rest are sitting around 8.5% at the moment.
Christian Taz has asked, in the personal loan space, which lender is the most dominant on the panel?
We use a range, so probably our most popular 3 are Moneyplace, Wiser and Now Finance. But we do have 8 personal loan lenders now.
Sabine has just put a note in there just how much he loves the process, very quick, so great feedback, thanks Sabine. Larry's asked, how is the commission calculated?
Yeah, so commission can only be charged in an origination fee. It used to be capped at $225 for a broker, but we've now upped that to about $550 per personal loan.
Fantastic, Jamie. I'm going to let you off there. That was really comprehensive and some great opportunities there. There is a few more questions in the chat that we will forward to you directly, and I'll get you to follow those up if that's okay.
No worries. Thank you.
Brilliant. Thanks very much, Jamie. Next on our list is Jason from Bank of Queensland. Jason, welcome.
Thank you. Thanks for having me. Can you see me okay?
I can see you. Yes, mate.
There you go. Welcome everybody. Welcome to Bank of Queensland. Thanks for having me, Nathan, and of course Nicole. First slide, Nathan. Okay, so we're going to talk a little bit about our policy niches. We've got a few to go through. First one up, we've got our most popular policy at the moment. Approximately 23% of all applications are going through on this application policy at the moment, and it's our salary self-employed. So very similar to CBAs, we have a salary self-employed product where we require 2 pay slips and an accountant's letter. Alternatively, you can provide an accountant's letter and 3 months salary credits. So the accountant's letter needs to state all the associated business entities. It has to be from the usual accountant. It can't be from somebody else. And it has to state that the business can maintain those commitments, including the wage that's declared. We'll take the second payslip, the most recent payslip presented, and we'll annualise that out to 52 weeks. To get the income right, we must have a minimum of 3 months year to date on the payslip. So that's our salary self-employed policy, very popular policy at the moment. So, next one. Another unique policy Bank of Queensland has is we have our overseas income policy. So we accept all those currencies noted, the Canadian dollar, the euro, the Hong Kong dollar, Japanese yen, Singapore dollar, New Zealand dollar, UK and USA. So essentially what we're looking for there is we're looking for a company a borrower who works for a multinational or an Australian company or an international. And essentially what we do is we look at that currency. We have a calculator on our website, not on our broker portal, but on our normal BOQ website. We have a currency calculator, so we convert it from the foreign currency to Australian dollars, and then in Australian dollars we shade that down to 80%, but then it enters our calculator as non-taxed. So you get a little bit more bang for your buck. Non-tax after the shading and after the currency, so it's a great policy and we get a lot of business on it. So. A little bit on our casual income. So outside of base salary, our casual income, most of it's accepted at 80%. We do accept essential services income at 100%. I have seen examples where we've had somebody who may be an essential service worker part-time, but then full-time doing something else, and we've still had all that income accepted at 100%. We accept car allowance at 100% and commission income at 60% and bonus income. We like to see 2 years worth of history, and we'll take the lowest of those 2 years that are presented. So we need to optimise there, but we accept that at 80% as well. And of course, like anything, we need pay slips within the last 45 days. So. Thanks, Nathan. Our family income, this is one of our niches. Our family income policy is a very good policy. Income that's accepted at 100% family member. Typical example is the son or the daughter works for the family business. They've been receiving pay slips. They've been there for greater than 6 months. We accept 100% of that income as long as they've been there for 6 months. But we need to be presented with an employment letter. We don't have a pro forma necessarily, but it's a straightforward letter, and we accept that at 100%. And we annualise that latest pay slip presented out to 52 weeks. Really good policy, works a treat for us. There's a little bit here. So multiple established units on site. So we do 3 properties on one title for BOQ Metro. Our postcodes are broken up between Metro Regional and Regional. 3 on one title up to 80%, and we can also do that for construction. We also do in other BOQ Metro locations, which are available on our broker portal, up to 6 units on one title, or 6 properties on one title, up to 65% LVR. Not for construction. Can't do construction on that one, but 6 units on title. Great policy. Cash out. Cash out is a good one. So anything less than 100,000, we need some commentary on the application form. Essentially anything over 100,000 to 250,000, we need some quotes and some estimates. And what we're looking for there, if somebody's after, for example, $200,000 cash out, we're looking to substantiate about 75 to 80% of that 200,000. If somebody's after 250,000 or greater, well, then we need a contract of sale for a property going forward, or a statement of advice from a financial planner. So it's a little bit tricky. Just quickly onto the pricing portal. So we encourage all Aussie brokers to go through the pricing request. There's a couple of parts to the pricing portal. There's a retention application application, but then there's also a new business application. So for your reviews and things, certainly utilise the retention aspect. For new applications, before lodgement, during lodgement, we can price all deals. We're trying to be really competitive in the space. So put down your competitors into the portal. It will come back automatically. Don't always pick or accept that automatic approval. If you're still not satisfied, don't leave it idle. Go back into the portal, click escalate, and then that will come through to me, and I can send that off for a special consideration to another area. Pretty simple to use, very similar to a lot of other brokers' portals, a lot of other banks' portals. We are enhancing that at the moment to include live loan tracking and that kind of thing. But for the moment, for the pricing, it works really well. So, and all our BDMs check the pricing portal every single day. So. And that's pretty much it. There's some contact details there, deals in progress. Everything goes through to the broker unit, or supporting docs get uploaded to apply online initially. You've got broker settlements for anything unconditional to settlements number from unconditional settlements, and then any post-settlement inquiries. Of course, we welcome brokers to call anytime post-settlement, not just a month or 6 weeks or 2 months. It's any time. And then my details at the bottom. Thank you. Any questions? That's it, Nathan. That's it. But feel free to throw any questions at me. So.
Sorry, Jace. I was just having some technical issues of mine.
That's okay. Just finished up. I ripped through that as quick as I could within the 20 minutes. So.
Bear with me for a second. We do have a couple of questions, mate, if you don't mind. Just let me catch up to them. Okay, so been asked, do we take borrower with 485 visa with Australian citizen partner?
We do. Our visas are a little bit. You'll need to reference the website, but we go through a process of, if it looks like this and we need a 12-month expiry left in the visa and we need validity of 4 years, generally we would accept the 485. So, but in the broker portal, you can go through and you can find the visa type and then work it back. But it's generally accepted, unless there's no reasons why they can't work in Australia. And as long as they've got free capacity to go in and out of Australia, there's generally no issue. So.
Do you, Masters asked, do you take contracted employment, employed income for Aussies working overseas?
We do take contract income, for sure. We take it at 80%, unfortunately. We just need, and we do take overseas contract income as well. We just need to see a solid 2 years of history in that space, and we need to see that there's been no real gaps in income for 4 months. So ideally, we like to see the current contract where they're being paid on, the previous contract that we're being paid on. But yeah, we definitely accept it at 80%. So. But if it's foreign currency, we'll convert it first. So.
Can you, Anthony's asked, are prison officers considered essential services under your policy? Well, Anthony, I don't know, to be honest with you. I'll find out and come back to you. I feel that they wouldn't, but you never know. I've had a part-time helicopter pilot that works 1 day a fortnight accepted as that. Prison officers, I'm not sure. I'll have to check, unfortunately. So I'll come back to you after the meeting. Okay, and one more before I let you off the hook, Jace. Carlos asked, family employment, is that a 6 months casual as well?
Yeah, so yeah, we need 6 months. All our employment states 6 months, including the family employment. So in the employment letter that's provided for the family employment, it needs to state a start date for the employee. But yeah, we need 6 months worth of history. Same with casual employment, we need 6 months.
Good stuff. Thanks very much, Jason. There's a couple more questions and I'll get them forwarded to you post this. I might now throw and welcome Michael from Bankwest.
Thank you.
Good morning. Good morning. Hi, Nathan. All right. Good morning, everyone. So welcome to Bankwest. So my name is Michael Elliott and I'm actually your outgoing BDM. Our team is currently expanding, and instead of each BDM managing multiple portfolios, we're all looking after one, which means I'm moving to a different aggregator in the next few days. Steph Lancaster will be your new BDM moving forward. She comes with a wealth of experience and will be a great fit for AUSSIE. So this means that Steph will be more dedicated to AUSSIE and won't be stretched over multiple aggregators. I'll actually now hand over to her for a quick intro, and then she'll get into cover off a few niches and interest rates, etc.
Hi guys, so my name's Steph. I'm your new BDM for Bankwest. I've been working with Bankwest for the last 9 years as a mobile lending manager, so I've got a wealth of knowledge around our policies and procedures. So please feel free to contact me if you've got any questions, you want to run scenarios, workshop any deals. My details will be sent out shortly, and I will be reaching out to you all over the next couple of weeks just to come and meet you all, say hi, and start a new relationship together, which would be great. So if we can just jump into the first slide, please. Oh, the next one. Yep, perfect. So some good news here, guys, around our cashback campaign. So this has actually been extended out to the 28th of February 2023. So just a reminder for refinances, up to 90% LVR with a 250k minimum, excluding refis from CBA. Okay, next one, please. So guys, this is a great one pager with all of our niches. This will be sent out to you all. So I'm just going to highlight a few of them just because it is a lot to go over. So first of all, we've got our self-employed policy. So 1 year financials for sub 80% LVR with a DTI less 6 or less. If we do ask for the 2 years, we will still assess the figures based on the most recent year, and we'll just require an explanation on the variance between the two. So that's great. Next one we've got is our cash out policy. So we'll actually do up to $1 million at 80% LVR with written commentary only. So no documents required for that, which is great. So high LVRs, so for owner-occupied purchases, will go up to 98% LVR, including LMI. And just one more I'm going to go through, guys, is just around security. So we'll actually do up to 4 units on one title, as long as there's an indicative approval for subdivision, up to 80% LVR. So that's just a few. As you can see, there's a lot there. This will be sent out to you guys, and happy to answer any questions if there's something else you'd like to know.
To the next one.
Yep, we'll jump across to the next one, please. All right, guys, so this is just current pricing. So these are available on the broker tables as of the 1st of September, and I'll go through a few of them with you now. So we've got owner-occupied P&I for both Complete and Premium Select, sub 70% LVR at 3.64 or 70 to 80% at 3.69. We've got the Investor P&I, both Complete and Premium Select, sub 70 at 3.94 or 70 to 80% LVR at 3.99. And Investor Interest Only, both Complete and Premium Select, sub 80% at 4.29. Now, even better, there remains a 5 basis points delegation within the pricing tool for above 500k and 10 basis points delegation within the pricing tool for above 1.5 mil aggregate lending. So that means we could do 3.54, which is excellent. That's it, guys. So I'm just going to open it up to any questions. So Michael and I are going to run through these together.
Thanks, Michael, and welcome, Steph. I'll just have a look at what we've got in the chat. Michael, you get a thank you from Sabine for all the help. Scholarship income with 6 months remaining. Does that fit in policy?
Scholarship income, 6 months remaining. No, we don't do that at all, unfortunately.
Okay. Harshall's asked, is workers' comp income acceptable? Do they need employer return to work letter for this to be accepted?
Yes, we do accept it, but yeah, we do need a return to work with a date. I'm just trying to see what percentage we use that.
It's at 50%.
Yeah, so
guys.
50% is what we would use. I have got a couple over the line where they can be slightly left of centre. So, just for example, they've got a set workers' comp until they're at the age of 60. So we will look at these outside of policy depending on each circumstance. But that's just the general guideline around us. I hope that helps.
Thank you. Well, the questions are flooding in at the moment, so we'll get to as many of them as we can.
Okay.
The next one's from Whitlam. It's around maternity policy.
Whitlam, yes. So we generally call that the extended leave policy. Basically, we will use return to work salary as long as we can get letters from the client and one from work saying that when they're coming back. And also they'll need savings to cover that gap.
Yep, and we'll use 100% of the income as long as we get those documents.
Good stuff.
Yeah.
Next one on the list is does Bankwest do guarantor loans?
Yes, we do. Short answer, yes. So it is family guarantee, so it needs to be a family member. They do need to seek legal advice. So we split it into 2 applications. We'll have one application at 80% on the purchase property, and then we'll do another for 20% plus cost against the guaranteed property, just to reduce that risk for the family members.
Just a couple of things with the family guarantor as well, though. We do it on owner ARC as well as investment, but we won't take a second mortgage, so it does need to be with Bankwest.
Stuff. Michael asks, does Bankwest auto decline based on credit scoring, please?
So we will get system declines, or what we call hard declines, but if you ever get that, come to Steph or I, because we've had hard declines overturned as well. Yeah. It just depends on the circumstances behind it. Sometimes there's a good story, so it's never a hard no until it's gone to a credit manager to be actually looked at.
So if there is an exception there, if there's a default or something, but there is a good reason as to why, there's definitely cases where we can get those overturned.
Ashimana, forgive me if I pronounce it incorrectly, but also passes on. You'll be missed, Michael, and welcome, Steph. Russell's asked, casual income, minimum time required?
6 months for casual income, and we'll use 100% of the income.
Staff, Jason Warrnable's asked, Steph, can you refinance 4 properties on separate titles in a company name? Properties have a common driveway.
No, so we wouldn't be able to do that under a retail space if they're in a company name.
Yeah, we only do resi at the moment, no company or trust lending at all.
Reese has asked for remote VOI. Do Bankwest still need the screenshot of the video call?
Yes, currently we do. Just of the meeting. There is changes coming. We're testing biometrics, etc., through Equifax.
This is still in the hush-hush, guys.
Yeah, so it's all proof of concept at the moment, but those things are coming because we understand this is a tough one, a pain point in our process.
Fantastic. And one more before I let you let you go. Carly's asked, what statements do you require?
So we actually don't ask for statements. So if we don't ask for, if you're talking about transaction statements, so we don't look for those at all if it's sub 80. If it's above 80, yes, we actually will ask for everything.
It also depends if the debts are showing on the CCR or not, whether we require those.
Yeah, so if they're on the CCR, then we won't require any statements. Home loans, if we're refinancing a home loan, not refinancing a home loan, we'll just need a summary page, which tells us what the limit is, the interest rate, and the remaining term.
Brilliant, guys. Really appreciate. I think I can speak for everyone on this call. Michael, thank you so much for your support, and Steph, welcome aboard. Really looking forward to working with
Thanks,
us.
guys. I'm really looking forward to getting out and meeting you all very soon.
Stuff. With that, we're going to throw to Jaron at CBA.
Thank you. Hello, everyone. Great to be here. Now, I do have Nick Padbury. He's joining us, so he'll be on. He's just jumping on to man the chat box. So if you do have any questions as they come through, Nick will try his best to get through to them. And if not, we'll get round to some of them after the presentation if we do have a bit more time left. So yeah, great to be here, and we'll move on to the first slide. Thanks. Right, so we've done a lot in terms of our pricing. Here we've got for both new lending and existing or retention. With our new lending, we've got greater visibility. So this just basically goes through. We now advertise our discounts on CommBroker. Now the discounts are tiered specifically by dollar amount and LVR. So what we'll do on the next slide, you can see in CommBroker we've got a table and what the table actually looks like. So we'll go to the next slide, please. Now Nick's actually sent through the link to CommBroker where you can find this. So click on that link Nick's sent through, save it as a favourite. So this is really good. So this is our matrix, what we will give. So, and here we can see that it's broken down to new lending, either below 500 or above 500. And then owner occ or P&I, owner occ or investment. And it is specifically LVR tiered. So you can see the specific LVR tiers. If you've got someone at 76%, to get that little bit extra discount, drop the LVR slightly if possible. So that's some really good news. I've got greater visibility on the pricing. So definitely jump on, have a look to see. Now this is purely just for the standard variable rate under MACQ package, obviously. Now we'll move along to the next slide. Now we do have a simplified refi process. I'll just briefly touch on this. It is on CommBroker. If you log into the training hub, there is a hyperlink within the training hub with the heading simplified refi, which has all of the specific information, but basically needs to be sub 80%, individual borrowers only, no guarantors. They're the key criteria. And essentially what we do is we just verify the income via payslips or via our standard income verification method. So all liabilities will be verified through CCR, and we're happy to, we don't require the salary credit accounts. So quick, easy, in the application comments, just make a comment to say that it is a simple refi. That way credit won't come back asking for the additional documents. Next slide, please. So now back onto pricing. So this is for basically whether it be a discharge or retention pricing. So we've enhanced this, we've taken on feedback, and we've changed our process. So the new process is we now involve our retention team right at the very start of the process. So you might notice if you jump online onto the CommBank website, if you go to the discharge authority, if you select a refi, you cannot proceed with the online discharge form anymore. It will prompt you to call the retention team. So what we do now is, as if you're the originating broker of the loan, what you'll need to do is jump on the pricing tool, submit a pricing request for retention as step 1. Step 2, when that comes back, if it's not competitive enough, if it's not what we need, you'll then escalate that pricing request. Once the escalated pricing request comes back, if still not good enough, or not what we require, then your next step is to call the retention team directly. Now, as a broker, you can only call if you are the originating broker. If the client visited another broker initially or went through the branch direct, you then need to refer the client to make that call to retention team. So there'll either be 2 outcomes. One, retention team will provide something where they stay with the bank. Option number 2, it's still not good enough, they must proceed with the discharge. If that is the case, the retention team will prepare the discharge authority themselves And then they will actually mark the client profile as basically mark them as do not contact. So the client will not get another call from retention within this whole refi process. So as a broker, we're putting the confidence in our retention team from the very start to offer something competitive to get the client to stay. If we have to go down the path of the refinance, as a broker, you've got that confidence to submit the deal with the OFI and know that CBA retention won't come in at the last minute throwing the kitchen sink to keep the client. So this is all based on feedback that we've received from brokers over the years. Really good process there. So next slide, please. So adding to our digital space, we now have the home loan onboarding form we can do through DocuSign. So you can select this through in Apply Online when you're completing the application. There is I touched on the training hub earlier. Within the Combroker training hub, there is a how-to or a user guide for our digital onboarding form, and it just goes through a step-by-step guide on how to establish that. Also, we now offer what we call a financial passport. Essentially, it's a credit check. So you can do a credit check, a free credit check through Apply Online, and it's the same credit report that our credit assessors use. I know there's multiple different companies out there, and brokers tend to get various different reports, but the ones we offer through Apply Online are the ones that our credit assessors look at. So it gives you greater visibility and no surprises. It is a free report. You just need to get the client consent before running that report. Next slide, please. Now, simplified accreditation. So here's a big one. We no longer need 2 years experience, no longer need 12 months experience, no longer need 20 odd applications funded within a certain period of time. To become accredited with CBA, it is a diploma of finance and mortgage broking or equivalent. So you may not have your diploma, but you may have had a master's degree in another field, but as long as you've done some finance related subjects, so even if you don't have a diploma but you've got a related field, reach out, ask the question and see if it is acceptable. The other 2 criteria, be an ACL holder of Aussie and have an MFAA or FBAA membership. So I presume, I guess they're obviously the 2 ones that tick the box immediately, but the diploma or equivalent, but no more experience. So that's a really good one. Really good change to our accreditation process. So hopefully those out there watching on that are not yet accredited, jump on, ask the question, and let's get you all accredited. Next slide, please. So our training hub, so this is a really good one. We've got online live webinars on a various range of topics. As I mentioned, we've got user guides and how-to guides. If you miss out on a live webinar, you can catch up on an on-demand. If you do jump on and view one of the live webinars, you do get CPD points for it. This month, for the month of September, the live webinar is on our pricing tool and how to get the most out of that. The one we've just finished up is on our self-employed and complex financials. So that one, jump on where you get the chance and watch that on demand. Next slide, please.
Darren, you've got 2 minutes, mate.
2 minutes, yep. So current offers, still got our 2,000 refi rebate, still got our NBN offer and our green home loan. So there's some really good offers there. So definitely jump onto Combroker on the homepage under current offers to get further information on that. That is the last slide. I will quickly touch on last night at 5 p.m. All Aussie brokers would have received an email about approval letters from CBA not being generated. It is a known issue. Basically, jump on, have a look at that email you would have received last night at 5. Essentially, when you validate the broker code, your personalised email drops off the system and gets replaced with a at updates@eaussie.com email, so the generic one. So when you validate, you just have to ensure that you go in and re-amend and manually amend to put your personalised email address to ensure you're still getting the approval letters when issued. If you do have any questions, please reach out to your RM, sales leader, or anyone, not just on the approval letters, but on anything we've touched on. I hope Nick's covered off any questions, but I might have time for just one or two questions.
Mate, it was quite comprehensive, Jaron, and Nick's done a great job trying to address the questions on the chat that I can see. We are going to move on in the interest of time. What we will do, we'll capture any questions that weren't responded to, and we'll get them through to both yourself and Nick. But really appreciate both your time, gents. Thank you.
Perfect, no worries. Sorry I was so rushed, but a lot to get through, and enjoy the afternoon.
Thanks, Jaron.
See ya, bye.
Next, we welcome Tharushi from Corelogic.
Hi Nathan, can you hear me?
I can.
All right, great. Hello everyone, good morning, good afternoon. So thank you for having me back. I've got a quick update on the mobile app today. As we know, the market is very competitive. As I always say, when there's an abundance of choice, the quality of the service matter. So if you want to, stand out from your competitors, use the most out of tools and reports available to you from RP Data and Property Hub. We've done a release to the mobile app recently to make it even easier for you to generate these reports and use the tools even when you're on the move and you're not in the office. Some of you might have noticed this. If not, go into your App Store, Google Play, and see if there are any updates. If there is an update, click on it and make sure you're on the latest version. The best way to make sure that you are on the latest version, if you please go on to the next slide. When you log into your RP Data account, you will see the version, go into more from bottom right, and then you will see the version just below where you will see the logout button. If it's version 5.1, that means you are on the latest version, which is great. That means you will have access to more report options. So with this new release, now you can generate sales history report, on the market reports, and rental comparison reports from your mobile app. Sales history reports are a great way to showcase the median value by property attributes using the latest recent sales transactions. For example, if you want to include last month's sales transactions and then showcase the median value for a 3-bedroom house, 2-bedroom unit, whatever it is your customer is looking for, you can quickly generate this report from your mobile app. On the market report, I believe you are all familiar with that. That's where you can showcase the listing data to show them what's currently advertised on the market for sale. Rental comparison reports are also available from your mobile app now. If you're working with investors, they might want to know the return on investment, potential rental returns in a specific area. They're all, broken down by the property attributes. You can generate this from the mobile app as well. There's another new feature available on the mobile app where you can create custom valuations now. For example, let's say we've got the wrong number of bedroom, bathroom for that property, or maybe your customer is looking to renovate in the future. They're looking to add that additional bedroom, bathroom. You can play with the property attributes and create a custom valuation. To do this is available on the mobile as well as the desktop version. Go to that property detail page where you will see the AVM. There is a link where you can create this custom valuation and share that with your customers as a text message, email, or even through your social networks. So all of these and even more are available on the mobile app. We've also released more filters when you run a database search. There are now almost 100 different filters available, so you can narrow it down to the right property, the right area for your customer. Just as a refresher, I want to quickly touch on the digital property reports as well. The next slide. I think last year I spoke about digital property profile reports. So this was released last year to everyone, all Aussie brokers. Digital reports are available via your Hub account, but you need to have an underlying RP Data subscription. So you need to have access to both RP Data and Property Hub to generate digital reports. They're more fun to interact, or a very interactive way and a fun way to share this data with your customers. Because when you share a digital property report, you'll be sharing a link with your customer every time the customer clicks on that link, it updates itself. So all the information your customer is going to see on this report stays current for 30 days from the time that report being active, from the time that report being generated. More importantly, as a broker, you can actually see the behind scenes. You can see how your customer has interacted with this report. So you can be proactive, get in touch with them and see if they have even opened the report. If not, give them a call, get in touch with them at the right time, and have a look at what other properties they are interested in, so they can you can send them more property data or the reports accordingly. Yeah, so all of these are available to you via your Hub account as well as from the RP Data research platform. As always, you can reach out to me if you want to organize a refresher session on digital property reports or anything else that you want to discuss. On the next page, you'll see my email address. So if you want to talk about how to protect your income, even how to find leads, especially these days when the market is very competitive, using property data, if you want to find your next lead, we can do this using the sales history, more likely to refinance in a specific area, or using the rental data. Send me an email. More than happy to set up a time with you, sit down with you via Zoom or Teams, or even I'm based in Melbourne, so I can come visit you if you're in Melbourne, and run a session on any of these tools and reports. Yeah, so that was me, a quick update. Do I have any questions?
You do, Tharushi. Fantastic. Thanks for the update. Sabina's asked, after the few updates, he's now unable to share reports directly via WhatsApp, which was working a few months ago. Is there any insight into that?
I'll have to look into that offline. If you can send me your username after this session, I'll ask the team to look into that. It might be just a account login issue or something. It should be working. So send me your username and I'll look into that.
Fantastic, Tharushi. That's the only question we have at the moment. I'll pause for a second or two just to see if we have any more. Otherwise, thank you so much for your time today, and we look forward to seeing you again very soon.
Yep, thank you everyone. Enjoy the rest of your day.
Thanks, Tharushi. Next we have Isabella from Deposit Assure. Isabella, have you joined us?
Yes, I'm here.
Welcome.
Thank you. Thanks for having me, Nathan. But hi, everyone. My name's Isabella. I'm the New South Wales BDM for Deposit Assure. I'm covering for Catherine, who is your BDM, because she's just enjoying her honeymoon all over Europe. But she'll be back next week if you want to get in contact with her. Today, I'm just going to give you a bit of an update on our new product, Flexi Bonds, that we released this week, but also what a deposit bond is, first of all. Next slide. Thanks, Nathan. So the big question, what is a deposit bond? Now, you might not know about it, but you've heard about it. So a brief overview is it's a guarantee up to 10% of the purchase price. So I do want to highlight that. It's a guarantee, not a loan. So say your client's maybe buying $1 million purchase, their deposit's $100,000, but they don't have the cash right now or just don't want to give up the cash till settlement, then we give them a guarantee. Then at settlement, they pay the full cash deposit along with any remaining balances to the vendor. Next slide, please. So some of the top scenarios we're seeing people use bonds for is first home buyers. So maybe they're borrowing 100% through a family guarantee loan, or they're short on savings. Investments. So whilst these clients can leverage down on equity, it might not be in their best interest to do so, and that could be down to timing and cost. Downsizing retirees, mainly they're into the next one, which is buying and selling. They're going to have that money when their property sells, but they just don't have it right now. Buying and selling, same thing. They might be your bridging loan, your mortgage substitution clients, and long-term settlements. So that's a big one for us, especially with a lot of developers going into liquidation. Keeping your client safe with having a deposit bond is the way to go. Now, the vendor can't, or the developer can't make a claim if it's at their fault that it falls through. If it's at the purchaser's fault, yes, the vendor or developer can make a claim, but keeping your client safe, especially with a lot of off-the-plan deposit bonds, the way to go. Next slide. So Flexi Bonds. So this is a new product we've released on Monday. Now, these are our auction bonds. So especially in this market, it's great to have these, and it helps the clients, get to auction. They're pre-approved, ready to bid, but also helping with private negotiations. So there's no upfront fee. So your client only pays us when they've found a property, and we change that auction bond over to a private treaty bond, and they're secured till settlement. So that means if your client goes to auction or private negotiation and does not get that property, there's no fee. It's convenient, it's easy to do. I get a lot of calls on a Friday afternoon and the bond's ready within from 4 to 5 o'clock. So it can get done nice and quick. Again, no win, no fee, meaning we don't need to claw back any commission that we give you guys as well, which is a massive win. Next slide, please. So a big question I've been getting a lot at the moment from my brokers is, how do I position bonds to my client? So I always suggest, when you're having your discussion with the client, talking about the deposit, why not ask, are you paying your deposit in cash or using a deposit bond? Get that conversation started and reach out to Kath or myself, and we can discuss the scenario and see how we can help. On the right hand side, you'll see our deposit bonds. So those are our digital deposit bonds. They're nice, easy, and ready to go. Next slide. So we've got heaps of flyers available. So if you do any digital, conversations with your clients, we can send some digital flyers, but we also have counter stands, and I know that Aussie will be sending some out to everyone shortly. So feel free to reach out if you need any flyers. And that's it from me, nice and quick. So if you've got any questions, feel free to reach out to me or Kath. And yeah, happy to have a chat.
Thank you so much, Isabella. We do have some questions.
Yeah.
The first one's from Harshal. Do we need a lender pre-approval for the flexi bonds?
So there's two ways we can assess a bond, and that's either pre-approval, subject to valuation only. I know with auctions there might be a few more conditions, so just feel free to send over that approval and I'll just double check. Or we can assess current equity. So we need to assess 2 times the deposit bond in equity. Now, if it's a first-time buyer, then we can assess in a guarantor.
Good stuff. Andrew's asked probably a little more of a pointed question. He's asking around any view to review the commissions that the brokers receive.
I know we are currently discussing with Aussie, so I'll get back to you on that one.
Good answer. Good stuff. Is there any other questions, guys? We have got a little bit of time here.
Sorry, that was really quick. So in Victoria, sometimes with the Section 27, real estate agents might push back on it because it does mean that they won't receive that part of their commission early. So reach out to me if you do get pushback. And I have a great email from QBE that goes through the reasons why they should use it. But at the end of the day, it's up to the vendor. So yeah, just reach out to me if you have someone that pushes back, and I'll go into that for you.
Good stuff. Thanks, Isabella. I'll just give maybe 10 seconds more if there's any other questions. Really appreciate your time, Isabella. Thank you. We will now move on to Shirlene from Heritage. Shirlene, are you with us?
Yes, I'm here. How are you going, Nathan?
Oh, good, thanks.
That's good. Hi everyone, my name is Charlene. BDM in, I look after 4 aggregators in Victoria and all in South Australia. Got my details on, they'll also be at the end of the presentation. So if you have any questions that you want to take offline, just grab my details and we'll talk then. But yeah, we can start. Sorry, next. Yep, so today I'll just be talking about who Heritage is, the pending merger, and what we're offering, what we do really, really well, some policy questions, talk about our niches and some, tips and all of that as well. Next. Next, Nathan.
the current offer one, Charlene? This one?
Oh, I can't see it.
Oh, can't you? Sorry. There's a pending merger with People's Choice Credit Union slide up.
Oh, okay. Yeah, so I'll just go through the Heritage. So firstly, Heritage Bank has been in the third-party industry since 1980s. If you don't know about Heritage, it's a Queensland bank. We're based in Toowoomba. So we're going through the current merger with People's Choice. So a recent announcement about that is very exciting for us. So we're looking forward to that merging to the two banks very soon. So the official date that they're talking about is probably is on the 1st of March. We'll see how that goes. I'm hoping that, there may be further, I guess they may push it back a little bit more, but that's what they're saying at the moment. So it's very, very exciting for us. It'll be good to, I guess, have a look at the strengths for each of the company. They'll be separate entities, I guess. So that's something that we're really excited about, and we will update as we go forward to see how they'll be structured. So we'll get on to the next slide, please.
The next slide's the current offer with the $2,000 cashback.
Oh yeah, it's taking a while to come up from my end. Sorry, just bear with me. Sorry guys, having a bit of technical issue here, so not sure why it's not coming up. All right, sorry. Okay, so the current offer that we're doing at the moment, we've got the $2,000 cash back, and that
Charlene, are you there?
you there? I'm so sorry. Don't know what's going on.
We just lost you. We just lost you.
Yeah. I got kicked out. I'm so sorry. It's probably got to do with my internet. NBN's been doing some work around here, so I'm so sorry. So that's our current offer at the moment. As you can see on there, if you have any questions, please let me know. So this is for home loans about $500. We currently don't have an application fee. Usually it's about $600. So next slide. So now we'll talk about the bridging loan. So bridging is, if you don't know anything about bridging, it's for, customers who have found a new home to purchase but haven't sold the existing property. So this is something that we do really, really well. It's some really exciting niches that we have for this one. So in order to explain this really well, I'd like to go to the next slide. Nathan, please. It's our estimator, so I can explain how that works. So as you can see there, you've got the bridge, which is on the left-hand side, and then you've got the purchase on the right-hand side. So this is a standard loan term of 6 months. It can be extended to 12 months. We just need to know that they're looking and all that. So interest is calculated daily and capitalized at the end of the loan. No repayments necessary, but if they want to make payments to reduce the interest, they can absolutely do so. Maximum LVR on that is 72%. Purchase, you get the client gets serviced on the residual loan only. So if you look at the purchase price, that's what you'll be serviced on, which is the client will be serviced on, which is the residual loan at $356,000. Okay. So yep. So the next slide, please.
Yep.
I'm just worried about the time. There's a lot to go through. I'm sorry.
All good.
So the next one we're going to go through is the family guarantee. So family guarantee is really, really exciting for us as well. It's something that we do really well. So the servicing is only on the other loans. Sorry. I'm sorry, having a mental blank here. Yeah, so what we do really well, we can go up to 120% LVR on the family guarantee using the purchase property and the parents' property. So 80% against the purchase property and 20% plus cost against the parents' property. So first-time buyers can have access to additional $50,000 cash out for renovations, or driveways, etc. All applicants can debt consolidate up to 5% of the purchase price. Servicing must come from the purchasers and not guarantors. What's really important here is parents must have an exit strategy. And they cannot use downsizing as an exit strategy. They must also show how they will pay their debt out if the purchasers default on their loan. And we can also go second mortgage for the parents. If the parents have a debt on the property, LVR must not exceed 70%, and legal advice is required. So, yep, that's it. We'll go next. For non-resident lending, so we also do expert loans. So LVR for that is 70% maximum. No Australian tax applied to servicing. So usually with this is we take about 80% net income in Australian dollars, and there's shading of 20% off that. So if you have any scenarios about that, please get in touch with me. Be happy to go through that with you. And also it's available to Australian and New Zealand citizens. Address must be specified on that one. So, and other things that we do is we do unlimited, for fixed loan, we do unlimited additional repayments. We do also do construction, and that can be on, it can be fixed or variable. So fixed is different, and not everyone does that, but we do that for construction. We also do balance, fully functional redraw, multiple units on one title. We can go up to 3 at 70%. Our DTI at the moment is 7.5, so it's pretty good. And we'll go next. What can you see, Nathan? I'm not sure where I'm up to.
We have the slide on policy guidelines.
So policy guidelines, okay. Yeah. So, yep, so it's pretty self-explanatory there, as you can see. You know, loan qualifying rate is 5.25 or actual rate plus 3%. Fixed rates allow for unlimited repayments and redraw. I think I've already said that. So we can go to the next slide. So this is something I just thought, you know, just to add on there, you know, because we get a lot of those, which kind of slows things down a little bit. So this is just some tips on how to get things moving as quickly as possible. So we just want to make sure that, you know, the home loan application has been complete in full and signed in correct places. Obviously, we say that because we see a lot of those come through, and then it does delay the process for the broker and the clients. So we just want to ensure as well that the package acknowledgement form and privacy is signed. Family guarantee, please have the guarantor sign the notice to prior mortgagee. Ensure supporting documents is legible and corresponds to the checklist on the application form. And please fully review the broker checklist before lodging. So, so yeah, that's pretty much it. So we'll hop on over to the next slide. So the broker's website is a very useful, it's got a lot of information on there. So anything you need to know, even how to submit documents on Apply Online. You can see, you know, all the calculator. Our calculator is very easy to use. It's recent, it's new. So I know if you've used Heritage before, there was an old one, which was really, it was like an Excel spreadsheet. So we no longer have that, which is really great. All forms and policies you need to complete an application for is also available on there, and contact details of our BDMs nationwide. What? So next. Yep. So yeah, so that's pretty much everything. I think I just rushed through a lot of the information just to allow time for some questions. I think if I've covered everything. Sorry, you there?
Thanks, Shirley. Yeah, no, fantastic. I'm just going to have a quick look through to see what questions we have. Here we go. There's one from me here. Why does Heritage Bank charge discharge fees per loan account? Other banks charge a flat fee irrespective of loan accounts.
I'll have to take that offline.
Yep.
Yes, please. So my contact details are at the end of the slide. If if you just want to grab that and we can take that offline.
That's good, thank you. There's another one here from Sanjay. For expats, can you accept POA with Australian address?
I'll have to take that offline. Sorry.
Okay, no, all good. We do have a couple of minutes. Are there any further questions out there? Marshall's asked one here, providing DA at application for refinance carries risk of retention team. Can this be done after approval?
Application for refinance risk carry. This question, I'll have to take it online because that's something, not really familiar with. So I'll have to take that offline.
Excellent. Thanks, Shirley. Keep going.
Yeah, sorry. I just wanted to say with self-employment, we require 2-year financials. I didn't mention that. And cash out, we need to understand what it's for. Over 100, we need evidence. And rate lock is 0.15 of the loan and 90 days for submission. So just wanted to also point that out. Also, most importantly, we don't do pre-approvals.
Good stuff, Charlene. Thank you. Thank you for the update. Appreciate your time and
no worries.
Hope to see you soon.
And sorry about that little thing there. Enjoy. Have a great day, everyone.
Thank you.
Thank you.
Next, we have Jim from Liberty. Jimmy, have you joined us?
I have joined you, Nathan. Thank you very much, mate. And thanks for having us on here today. Really appreciate it. Good to see another great turnout with close to a couple hundred people online. Very, very good stuff. I'm Jim Mills. I'm your residential BDM here at Liberty. For those of you who don't know me already, it's good to see some familiar names as well as some new ones as well. Can we just kick us off with the first slide, please, Nathan? Thank you. So, we all know that especially in recent times that, flexible home loan solutions, or finance solutions, I should say, are needed more than ever. And this is why at Liberty we are there to help such a vast and wide range of customers in any situation, really. We are a company that in our past 25 years we've been able to build a full suite of products. That's really enabled us to help diversify our offering, which in turn it has allowed us not just to help many customers in need get financial, but also help our very highly valued business partners and alternate solutions help grow their businesses as well. Next slide, please, Nathan. Looking at the residential offering at Liberty, we certainly do have a very wide range of flexible home loan solutions. One of our key strengths is our service in being able to offer very speedy turnaround times on all applications for all brokers. This includes complex company applications as well as fully assessed pre-approvals as well. I mentioned it before, we do want to provide you and your customer with industry-leading service, which is why we allow you to call directly through to our assessors as well, and settlements officers that are also based in head office in Melbourne also. We are very flexible with our cash out policies. I know saying that a lender does cash out is it's a little bit like saying the sky is blue really, or like the sky is grey as it is here in Melbourne, but there's slight variances between every lender, and with us it is completely unlimited to 80% on full doc and completely unlimited to 70% on low doc. It's also uncontrolled, so if that cash out makes sense with the customer profile, we're happy to provide unlimited cash out and distribute directly to your customer at settlement, so we don't have to do gradual drawdowns or show full evidence of funds. Just an explanation is normally what suffices. There is also flexibility in being able to provide solutions for credit impaired applicants as well. And this includes applicants who have anything from small unsecured defaults to previously being bankrupt and anything in between, really. These deals, they are definitely worth doing and not shying away from. They might seem a bit difficult at first, but they are definitely worth doing for a couple of reasons. So the first one is you're going to be helping a customer with a solution that they probably thought might not have even been possible in the first place. And you are more than likely to have a customer for life on these deals, with repeat business coming in the door again. And secondly, if you do shy away from them, it's almost guaranteed that they'll go to another broker down the road who will do that deal for them, not just get that deal and the future business from it, but also the referrals that will come with that business as well. So do note that there is always a nice and easy solution for those types of customers at Liberty. Our debt consolidation solutions, they've been a really big strength of ours recently as well. So our debt consolidation, we can do completely unlimited debt consolidation. So if you've got a customer that's got 150, 200, 300 grand of unsecured debt, we are more than happy to consolidate the whole lot into one neat home loan. And it's worth mentioning in that debt consolidation, we have seen a bit of an uptick in ATO tax debt consolidation. So, yeah, the tax department seems like they're being a little bit lenient in the last couple of years, and now they're kind of knocking at the door, asking their customers to pay their tax debts. And we've been helping those customers to pay them out, because the ATO, they sort of want them over sort of 3-4 year term, if not quicker. And if you've got 100, 150k tax debt, that can put a fair bit of stress on your business cash flow. If you can refi that over to a 30-year loan term, that'll help greatly with your business cash flow there. So worth mentioning that tax debt. We've got regional security accepted there, and the reason that's there is that we have reworked and rejigged many regional postcodes. So regional locations, they've become more and more popular recently, and we've actually bumped up the LVRs we can do in a lot of them, and able to offer 95 plus full cap of LMI in more and more regional postcodes, which is really nice to be able to offer that to our regional locations, help more customers that way. Non-standing income, that's a big strength of ours. We can accept most forms of non-standing income, including pretty well all sorts of Centrelink payments, from family tax A and B, single parenting payment, all the way to job seeker. We can also accept work cover and income protection as well. And for self-employed customers, we do have fantastic low doc solutions available, where we run off just one form of verification, which can be accountant's letter, 2 quarters BAS, or 6 months bank statement. So just a reminder, we only need one of those three. And if the deal is 70% or less on our prime product, then there is no risk fee at all either. We don't credit score either. So any deal that's 85% or less, there's no credit scoring. Just means that when you submit the deal to us, you're not going to get any sort of unpleasant surprises along the way. It gives you more certainty and more of a guarantee, I suppose, that when you submit a deal to us, that it will lead to a nice, easy settlement. First home buyer specialists are there for a couple of reasons. So we can do up to 95 plus full cap of LMI, and it's there too because we can do it with non-genuine savings also. And finally, one last thing to mention, it's not on the slide, but one of our biggest strengths at the moment is our serviceability calculator. So the Liberty IQ calculator, it is one of the most generous on the market, where not only do we still assess all OFI debt, so that's debt at other lenders that is not coming to Liberty, we assess all OFI debt at actual repayments, even if it is interest only. But also the changes to buffer rates in the market, we're still assessing the debt coming to Liberty at just a 2% buffer rate. So especially in cases where a customer has existing debt and wanting to purchase, a second or third property, or do a bit of a cash out where they've got a couple of existing mortgages that are going to stay elsewhere, you can borrow not just thousands of dollars, it can mean hundreds of thousands of dollars more on our calc compared to lenders who stress that OFI debt repayment. Next slide, please. Thank you, Nathan. Yeah, so just to wrap things up, with the percentage of broker written loans quickly increasing to 70% and beyond, we do truly believe that providing a diversified and flexible product offering, it's simply not enough. So we do want to provide the best possible industry-leading service and platform as well in Liberty IQ to make every application as seamless as possible. As well as this, we do want to provide you with the best possible BDM support too, which is why you do have a guarantee from myself and your BDMs in other asset classes that we will be ultra responsive to assist you in your business and helping you offer customers quick and fast solutions. So that's a bit of an update on Liberty's current residential offering. If you do want to chat more, please feel free to get in touch with myself at any time. Yeah, I'll put my details in the chat box, and if you don't have them already, save them in your phone, and we'll be in touch, no doubt. But were there any questions?
Thanks, Jim.
In the immediate term?
We do. Just bear with me. I'm just going to go through the chat, mate, and just work out where.
Yeah, I can see that too. Single parenting payment, Jane asked. Yes, we can. The age limit for that, will accept it for children that are 11 years or younger in prime and 13 years or younger in custom. So we will use that single parenting payment there. Interest rate for first home buyers, that obviously just changes depending on the LVR. For that 95% product, that rate at the moment is 6.49 if you want to do the 95% plus full cap of LMI.
It doesn't have the same menu as it does online.
I think that was most of the questions. Around a couple of minutes ahead of schedule, which is always nice.
It is. We'll give them another couple of seconds, Jim, just in case we've got any others out there. A nice little message from Baha there.
Oh, thank you, Baha. I appreciate that, mate.
Just saying, great service. Jim, again, really appreciate your time today, mate. Great update. Look forward to catching up soon.
Thanks to the Aussie team. We'll be in touch soon. Appreciate it.
Brilliant. Thank you.
See ya.
All right. Next we have Alice from Macquarie. Alice, have you joined us?
Hello, good afternoon everyone. Hope you're all well. Great turnout, so thank you for having us along. I'm Elise actually from Macquarie. I'm one of 13 BDMs in Victoria. You might all have a different BDM depending on your relationship with us. We sort of structure it a little bit differently in terms of who your BDM contact would be. But I am one of the guys in Victoria. Now, I wanted to take you just through a bit of an overview in terms of what our sort of service proposition is to you as brokers, and then also some of our policy points. Happy to go into the next slide, Nathan, when you're ready. Thank you. So, why Macquarie? We really are committed to providing a really transparent and consistent service to all of our brokers, and we've invested a lot in our tools that we provide to you, as well as the resources that you've got available at hand. First one is free Equifax reporting for all accredited brokers. Now, we do encourage you to use this for every potential deal with us. Particularly, it is important from this week to be using our access, because we've actually upgraded our extra Equifax report to the Equifax 1 score rather than the comprehensive score. So it does appear a little bit differently. So if you are looking at deals with us, set up your access through the Macquarie service. We offer free upfront valuations. Now, that is for properties valued up to $5 million across the nation. For any properties above that threshold, we'll just arrange that val during the credit procedure. We also really want to make sure that you can have a guaranteed expectation of what your experience is going to be when you send a deal through to us. So if you happen to have a deal that is maybe not exactly inside the black and white policy box, or there's something that you're unsure of, we actually have a operationalised upfront scenario exceptions process. So you would actually work with your BDM to seek a particular exception to credit, and we'll workshop that with the credit managers to get that confirmation up front that you know what to expect when it comes through for assessment. We are very committed to providing a consistent turnaround. So our average SLA for the last 12 months has been around 4 hours to get a deal through to credit if we have all of the mandatory documents on file. And we are really committed to educating you on what those would be as well. And we've got lots of resources on our website that you can follow through on. We also are very committed to making sure that every broker that's accredited with us experiences the same service. So we don't have preferential treatment for brokers. You will all get the same experience with us in terms of our turnarounds and access to our products and pricing as well. We recently introduced our broker portal, and we've been implementing iterations of improvement regularly throughout the last 12 months. So you can actually do live tracking on your applications in the portal, but you also have access to your existing clients' information. Now, this will give you visibility on things like what their balance and limit is, but it'll also show you what their current rate is. If interest only or fixed rates are approaching, it'll actually give you the expiry date. And it'll also give you some information around their repayment structure as well. So this is really important, particularly at this point in time, for assisting clients with their loan maintenance as well, because obviously we know a lot of clients are coming back to their brokers for support at this time. We also have our Broker Help Centre. So this is basically your BDM in a pocket. So if you're working outside of hours or over the weekend, those questions that you might usually have for your BDM, we have our Broker Help Centre, which is no passwords required. It is linked on our broker website. Basically, we've documented many of the regular questions that we would get from you, and you can access this all free on the website as well. So, whether that is, how do I conduct a rate review for my client, or my client wants to change their direct debit, how do they do that? All of that information, you can just go on the Help Centre and search for your question, and it should pop up an article for you. We also have our dedicated broker support team, which is based across the country, but the main hub is in Sydney. And they are available via phone or email to assist you with any escalations, any pre-settlement queries that you have, as well as helping you with in-flight deals. We have a very simplified product suite. So we've got our basic product and our offset. Very easy to understand. The offset package has a low annual fee of $248, and you can actually link up to 5 applications under that one package fee. With the offsets, we also offer multiple offsets, so you can actually have up to 10 offset accounts per split. And we've also recently introduced a update in our internet banking. So clients can now do a new one-click offset in their internet banking if they're wanting to set up additional offset accounts after settlement. It's very quick. They don't need to call us. They can request it all through their internet banking. It'll be set up straight away. Now, pre-approvals, if you've got a pre-approval that is linked with a refinance, we can automatically assess that manually as part of the refinance assessment. So that way you can give your client that comfort and guarantee on the pre-approval. Once you've got formal approval, we use MSA in Victoria, and the turnaround for getting documents out is very quick. So generally we're getting those docs out within half a day. Official SLA is 24 hours, and they are all sent out via DocuSign as well. So a very quick turnaround there. Next page, please. All right, so here's just some policy call-outs that we wanted to go through. There's a broad range here, but it's always good to sort of spark some interest for what you're working on. Like Jim was saying from Liberty, cash out, obviously a lot of lenders are playing in that up to 80% for cash out. We're very good with cash out. We can actually do unlimited up to 80%, and on the most part we can go on stated purpose as long as the cash out purpose matches the client's profile. As an extension of that, we do allow cash out for construction, so we can actually go up to 80% of a land value to support a construction. We just need to sign a copy of the build contract for those instances. In addition to that, though, if they are going to be doing structural renovations, we can actually go up to 80% of the current market value of the property, just as long as that loan amount doesn't exceed the value of the land. And we can go on stated purpose for that as well. We don't need to get builders' quotes to support it. We take 100% of allowances also, as long as it's a condition of their employment and it's industry standard, we can actually include those at 100%. And also 100% of overtime. So if you've got someone that's in essential services, like we've got listed there, we can take 100% of their overtime. I like to call out public transport workers because they often get overlooked under this policy. But if you've got someone that's a train driver, a bus driver, if they work for the public service, we can take 100% of their overtime, as well as provision of health services. So, not just necessarily nurses or doctors. If you've got someone under that health services banner, as long as overtime is a consistent condition of their employment, we can look at using that overtime at 100%. If you're a bit concerned about whether the client falls under that banner, just reach out to your BDM and we can have a look at it. We offer non-trading company and trust borrowings over residential securities as well. And that is actually subject to the same SLA turnaround for assessment, so that it's not going to necessarily take a longer period for credit to pick it up. But you do want to note that we have to cite the trust deed up front before we can actually get the file to credit, and it has to be certified. No notional rent will be applied for an applicant that's single with no dependents, and if they live with their mum and dad, we can actually waive notional rent in those circumstances, which otherwise would usually be $650 per month. For PAYG workers, we actually don't have a probation period policy, so we're okay with new employment in those cases. Our minimum tenure requirement is 6 months in current role or 12 months in industry or in the same line of work. But if you've got someone that might have, be first week in the job, but we've got their employment contract, their first pay slip, and they've got consistent employment history and consistent levels of earning, we're happy to consider that. Self-employed. So for self-employed, we want 2 years of trading in general. But one of the really strong niches of our self-employed policy is that we actually don't expense business liabilities. So if they've got liabilities held in the business, we do not need to expense them in servicing, which is particularly helpful at the moment. What you also want to note is that if you've got a client that is a sole trader and perhaps they've got a credit card that is expensed under their business income, we can also look at excluding that from servicing. As far as our add-backs go, we can still add back depreciation in those cases. It does get capped at 20% of the net profit, but the calculator will work that out all for you. And also, if I had an instant asset write-off in the last 2 financial years, we can actually look at adding that back at 100%. Just contact your BDM to talk you through how to apply that in the calculator. But that will often flick your servicing for self-employed from a loss to positively trading. So definitely keep an eye out for those. And if you do have someone that is employed in a specialist field, so if they are a practicing lawyer, doctor, engineer, or an actuary or accountant, we can actually work off 1 year's trading up to a cap of 70% LVR. And then one of our latest exciting announcements is that we have actually increased our appetite for that 70 to 80% space. So we've lifted our DTI limit. We can actually now go all the way up to a DTI of 8 up to 80%, which is a big win for us. We're sort of going out to market. We want to play in that 70 to 80% space now, and you'll start to see that our policies align with that as well. You might have seen the announcement last week that we've actually upped our policy for mature age borrowers and expat borrowers up to 80%. Originally, it was sitting at 70%. Now, I know I did fly through that quite quickly. I can see that there are some questions in the chat. Let's see. So, Sabin, does bus drivers come under public transport operations? Yes, if they're employed in public transport, then yes, that will come under that essential services for 100% of overtime. You just want to be careful that they're not in a private bus service, because that actually won't fall under it. Brow, so 2 questions. Some lenders like NAB are moving away from annual packages and rather charge a monthly fee for each loan. Any such movement from Macquarie? Look, there's been no talk of changing the fee structure. The way that we actually apply the package fees, we split it into 2 payments. So the 248 will actually be split into 2 biannual payments, just so that it's not one big chunk coming out at one time. I don't think there's any talks of it changing to a monthly fee though. Current market of refinancing is going by cashbacks and improved pricing through pricing request. Is Macquarie considering cashbacks and opening to pricing requests? Look, cashbacks, you probably won't see us go into the cashback market. It's probably just not an area of the market that we want to play in. I don't anticipate that will change in the future either. As far as pricing goes, we, for the most part, carded rate is the best that we can offer. However, if we are sort of coming head to head for a particular deal and you need perhaps a little bit of support on it, definitely reach out to your BDM and see if there is anything that we can do. But ultimately, we will stay pretty close to carded rate. And then Leanne, will you do lending for customers where there's a sole trader who changed to a company? That's fine, Leanne. So if you've had someone that has been trading for 2 years, but they've simply changed from sole trader to company, it's basically just a paper change, but they haven't sort of ultimately changed the operations of the business. If they haven't introduced any other shareholders or directors to the business either, we're fine to consider that as a continuous period of trading. What you would do in that case is sort of combine the sole trader tax return with their company tax return for those 2 years. Sanjay, so casual employee verification, especially for year to date for this financial year, just July and August. So for casual income, what we traditionally do is we can actually annualise their income once we have 6 months on their pay slip. So obviously that's not going to be relevant at this point in time of the year. So what we would get in addition to their 2 pay slips is their income statement from last year. So you'd annualise their pay slip out over 48 weeks, compare that to last year, and then you'll take the lower of the 2. Now, if you've got someone that's in new employment for casual, we probably want to see that they've been in that role for, maybe 3 months at a minimum, so we get an idea of their hours. But you'd want to definitely run those past your BDM, just simply because we're looking for the industry. So if you've got a nurse, it's obviously quite common for them to change between hospitals, and there's a really good consistency of income there. But if there's sort of other professions where it can be quite fluctuating, we want to take a closer look at it. Can you please go over the pre-approval? You still need a payslip, etc., to get it to change to a full app. So if you're submitting, say, a refinance and then a linked pre-approval at the same time, because we're already going to be assessing that refinance and we will have all of the income documents for the refinance, we will group them together and review them at the same time. And we would need all of the supporting documents to complete that assessment.
Elise, thank you. That was quite comprehensive, lots of questions, which is great to see. I want to start by apologising for mispronouncing your name in the introduction.
Oh, that's all right. I'm actually used to it. That's okay.
Yeah, look, I appreciate the update and your time today. Thanks very much, Elise.
No problem. Thanks, everyone. Have a good day.
Next, we have Alicia from ME Bank. Alicia, are you online? Aisha, sorry? Aisha, are you online?
Oh, yes, I am. Can you hear me?
Welcome. I can now, yes.
Hi, how are you?
Good, thanks.
Hello, everyone. My name's Aisha. I'm one of the BDMs at ME Bank. I am a field-based BDM, and we do have some desk-based BDMs as well. So there's about 9 of us in our team. But just wanted to start with a quick thank you for attending and for me being a part of your little lender lunch. So we can go to the next slide. Cool. So this is just a quick agenda of what we'll cover today. So me, who, the products, who's a good fit for me, and just our current rates and promotions as well. And you're ready. Perfect. So you plus me equals a committed relationship. So about 70% of our home loans are generated through our broker network. So our promise to you is that home lending is our number one area at the bank that we do invest in. We do focus on improving our speed, ease and consistency by investing in our technology and our teams. So just to give you a quick idea, we're sitting at 3 days SLA at the moment on a clean deal and 1 day for rework if it's required. So we are really seeing a lot quicker turnaround, and we're getting about 35% of our deals approved unconditionally through our verifications team, so it could even be next day. And we are a branchless bank, so brokers are our extension of me. So we really do value you guys a lot here because you write nearly all of our business. Next slide, thanks. So that must be a typo. Just a quick one on our home loan product. Can't hear me?
Yes, no, we've got you.
Okay, perfect. So we like to keep it really simple. We just have the 2 products. We've got the basic and the home loan. The basic and the flexible. With the basic, it's exactly that. You cannot split it, you can't fix it, can't rate lock it. It's very simple, no frills, low rate kind of product. And then we have the flexible, which is where you can do all your fancy stuff by splitting, fixing, and all of the things the basic won't do. And it has the option to add the member package on as well, which will give you a lower rate for your customers. And it also, the member package will waive the $200 valuation fee. Just know that with the basic, we're sitting at 3.64 at owner occupied at the moment. If it's a desktop or an AVM, we won't charge the valuation fee on the basic home loan as well, just to let you know. Next slide when you're ready. So who's a fit for me and who we like to see coming through, if you just want to pop across, perfect. So low LVR, equal to 80%, PAYG employment, not construction, strong servicing position, DTI under 6. We will go up to 7. Just know that when we're between 6 and 7, there is, you need a $250 surplus. We don't do guarantor loans. We do spousal guarantees, but just no family guarantees there. So the benefit of having these kind of customers is that we can keep our pricing lower, and these customers will get a simpler application, quicker and easy to prepare, and we can get things done quite quickly. Next one. So essential workers, for us, we do accept 100% of overtime, penalty rates and staff allowances for our essential workers. Now, we do include in our essential workers teachers, whether they be primary or secondary, childcare workers, any key line healthcare worker as well, so it doesn't necessarily need to be a doctor or a nurse. And we include disability workers, so any mental health or anything like that as well. And we also include defence and prison services as well. Next one. Predominant pricing. So this one could be really handy at the moment with interest rates going up. So basically we can take, if you've got an owner-occupied debt, you have an investment debt, as long as the owner-occupied debt is at least $1 more, we'll take them both under owner-occupied rates. The only thing to remember with this one is that when you are inputting it, if you do put, I'm not sure what's happening with that. If you do put the it through your data entry, you need to put them both as owner occupied, otherwise it will not come up on Aussie's system. They do need to be the same repayment type, so both, if it's owner occupied, it needs to be principal and interest for both, and they do need to be crossed. If you've got 2 investment properties, 1 owner occupied, provided that the total of the investment is still less than the owner occupied, we'll take them all under the owner occupied as well. So it's really, really handy at the moment. Next one. If you have any more questions on these, feel free to reach out to myself or your BDM as well. The spelling is actually correct. I'm not sure what's happening. Anyway, mature aged customers. So we will consider downsizing, super, selling of assets when we are considering exit strategy, and we won't restrict the loan term for over 50s either. So provided that it is a good exit strategy, a strong exit strategy, we will consider a 30-year loan term. I'm not sure why it says 20, but anyhow. Self-employed, so business debts. So even though we like the PAYG, we'll still take self-employed. We will exclude business debts if the company is trading profitably. And depreciation is also on the table as well if they have made a profit in the most recent year. We take health, charity and non-for-profit workers as well, and we will take their tax-free income, so no adding back there either. Next one. Awesome. So we do still offer loans to all different types of customers. Just to give you an idea, so with owner-occupied, we will go up to 95%, including LMI. Construction, we will still do up to 80% maximum. We don't require genuine savings, so anything 90% base, no genuine savings, so no need to prove that. And we'll also take 6 months rental history as well. Investing, so we'll go up to 90%, construction loans to 80 as well, and we'll display homes to 80% there. And when we're inputting the rental income, we take that as tax-free as well. So when we're refinancing, we can do unlimited cash out up to 80%. And there is different requirements for that, but just to give you an indication, if we're looking for over 250k cash out for a future property purchase, we can accept either a contract of sale or we can accept a real estate declaration, just to say the customer's actively looking in this area for this amount, 300, 400,000, as long as the equity's there and it's up to 80%, we'll consider that with the declaration. We'll also take holiday homes at owner-occupied rates as well, and we don't have any postcode restrictions, just depending on the security. But yeah, there's no real restrictions there either. Next. So our calculator is still the Excel one. However, it is really, really handy. That's okay, Nicole. We've got all our calculators included in the servicing calculator. So we've got the self-employed calculator, we've got the funds to complete calculator, and the year-to-date calculator. So when we're looking at our casual employees, and working out their income, it's really handy there as well. I'll go next. Anyhow, that's the end of my presentation. That's not that phone number is correct for me. I'm not sure what the other one is though. But yeah, I'll leave it open to any questions.
Hey, sure. Look, I will also apologise. We had a look at the slides yesterday and the formatting was fine, so I'm not sure what's happened between yesterday and today, but you've done very well to get through that.
No, that's okay.
Just having a look at the chat here just to see if there's some questions. Just bear with me for a second.
That's okay. There's lots of comments about the presentation.
Okay, just bear with me.
Tomorrow I'll let Liam know.
Okay, so Iggy's asked if we're submitting multiple applications for the same clients new to ME, do we still need to say no in apply online for the first application for existing
Yes.
clients,
Yeah,
and then
so,
yes for subsequent ones? Yeah.
Yeah, so for multiple applications, we do need to have the first one as not a customer, and then the second one or therefore after needs to be yes, they are a customer of lender, and that's especially important at the moment when we've got the $2,500 cashback, and that is a multiple cashback. So if the customer has 4 properties, that's $10,000. So yeah, it is one to remember. You can switch between basic and flexi as well, whether that be after settlement, and there's no cost to the client for that either. The only thing is to remember, if you've done the application and you want to switch it while it's still in the application mode, you will need to resubmit a new application.
We'll just do, in the interest of time, we'll just do one more, Aisha, if we can. Okay. Claire's asked, just confirming, is it 80% construction, not 70, as written on the information form?
No, it's 80.
80, fantastic. There's a few more questions here that we will get through to you.
Yeah,
thank you.
That's right.
You've done exceptionally well to get through those slides, given
given
the challenges. Really appreciate your time. Thank you.
That's okay. Thanks for having me, guys. Take care.
Next, we have Jason from Suncorp. Jason, you with us? Hello, Jason. Jason, are you on? Okay, it doesn't appear that Jason's, so there might be some technical issues. Brendan from NAB, have you joined us?
Yes, I am.
Mate,
just trying to get my background. We use Zoom, so I was trying to chuck the background on there, but you're just going to have to look at my house.
It's okay, mate. Just bear with me because I'll just bring up your slides if that's okay. We might just advance you. Over to you, Brendan. Thanks.
Hey, thanks for having me. Sorry, I was just trying to set up the camera. Can you hear me?
We can, mate. Yes, all good.
Right, perfect. So Brendan from NAB, thanks for having me today. I'm just going to take you through our offering. It's only 10 minutes, and if any of you know me, the secret is getting me to shut up, so I'll try and keep it as short and sweet as possible. We're going to go on to the next slide. Thanks. So yeah, we've renovated our tailored home loan. We've had the tailored home loan for years, but we've changed the programming. So it's completely renovated in the back end. I'll get you to move to the next slide, please. So we've refreshed the tailored home loan, so customers have the ability to choose variable, fixed, or split facilities. Can be used for owner-occupied investors, free redraw up to 500. Sorry, a minimum 500. Access to offset accounts. Mainly, we've got the LVR tiered pricing in there. However, the main benefit of using the tailored product is it's completely computerized. So right now, probably 2 in 100 of our home loans get system approved, system verified, docs out in 2 or 3 hours, and we'll continue to scale up. So this is a product of the future, and that's what we want you to use moving forward. Can we go to the next slide, please? So it's the new digital experience that we're now offering. It's the simplest home loan experience we've ever had. We're giving you simplicity and speed. If we've got the customers banking with us, pretty much the system will verify everything internally. It doesn't actually get even touched by a person, and we'll get you a same-day unconditional loan approval. So it is getting scaled up, but using the tailored product will help us get there. So you'll have a purely digital experience that's also streamlined the onboarding journey for your customers and simplifies the loan documentation. There's no change from your point of view on what you do. All you do is pretty much select the tailored home loan, which is our hero product, better pricing on there right now anyway. And we'll be able to direct more and more files to this so that you can spend more time working on acquiring new business rather than trying to get deals across the line. So that's the update from our products. We'll just move on to our offering. Thanks. So here's a few niches, few NAB niches, and one of them's salary sacrifice up to $900. You don't need to go to a credit manager anymore. If at your discretion, we're happy to add that back tax-free if the customer is entitled to it, and it just helps with servicing. So with PG income, there's no more minimum. We never actually had any minimum requirements for 10 years. So if someone's got a new job, brand new job today, they've never worked before, or they had months off, you give us a contract, we don't need a pay slips. We're happy to verify it on an executed contract, provided they've started in that role. We'll take questions at the end. We'll probably just go through these. Commissions, overtime, and bonuses. So commissions, overtime, bonuses, we're using it, shading at 80%. If the allowance is within 20% of each other, we'll add it to the base income and use it in full for servicing. Return to work, fairly lenient. The base income for servicing, permanent part-time, permanent full-time, as long as they've been in the role for 12 months, we're happy to just go to the broker and say, hey, what are they going back on? If they say they're going back part-time, we'll use part-time. They're going back full-time, we'll use full-time. We'll just ask you for the old pay slips, and that's what we'll verify it on. Return to work letters are not required. Any shortfall during that period that they're not working, you can cover it with savings, other government payments, anything at all that you can use to cover that hole. Medical policy, we're not doing LMI waivers up to 95%. No change to investor interest only restriction, so that's still at 90%, but owner occupied you can go up to 95 now for the medical waivers. So medical, dental, pharmacists have been added to the list. And we can lend to an entity and no minimum income threshold. So if you've got a doctor who's buying a house in the name of a company, if they're the director or trustee, we're still happy to honor those LMI waivers. Cash out, unlimited cash out. Well, we don't verify it if it's under 80%, as long as it's for commercial, not for commercial use or nothing illegal. I've seen loans up to $4 or $5 million cashed out for the right client. We'll ask you what the money's for, you tell us what it is. We won't do cash out for construction loans if the security is with us. We're trying to protect the customers, and that's why we do those. LMI approvals. LMI is automatically approved by QBE when a loan's approved at NAB. We have a DUA with them, so anything up to $2.5 million and 95%, we don't have to go through the provider. You meet our policy, you meet theirs. So casual and contractors, so we've changed our policy over the years. These days you could have 6 different jobs over the last 6 months. I use the example, you could go from Hungry Jack's to Domino's to Pizza Hut. And if you work there for 6 months, either in the casual or contract role, we're happy to annualize that income over 52 weeks and do the deal. So essential services, 100% of all income acceptable within, you've got to give us a 6-month period. No shading will apply to those essential services. So ambulance officers, firefighters, nurses, midwives, paramedics, police, protective services, auto security and medical and other eligible health professionals, 100%, no shading, because we know that that's what they're going to do. This is a big one and perhaps our biggest change. We are now doing 1 year financials for self-employed customers, so 1 year of data. We still need the 2 years, but we're happy to use 1 year to assess the loan. You still have to give us a reason of why you want to use 1 year. Perhaps they picked up more contracts, perhaps it's a new business, they haven't been trading for 2 years. They've been on maternity leave, or taken some time off from work, or they've probably got 2 shop runs, anything like that. We won't use COVID, so you can't just say, oh, they were impacted by COVID or the sales went up. We want to know why, but we're fairly lenient in this particular category. We've also changed the verification policy with the self-employed clients. We will accept, and this is what the policy says, just financial. So if it's a company, if the director's wages are listed on there as a line item and there's only one director, you don't need the personal tax returns and the NOAs. We're happy to just do the assessment of the financials. So you give us 2 years, we're still happy to use 1 year if you tell us why. Otherwise, we'll use the average if you don't tell us you want to use 1 year specifically. But that's really easy to verify now, so you don't have to provide too much too many documents to verify the self-employed income. Just financials, no NOAs, no tax returns, provided the financials actually have the director's wages. Or if there's multiple directors, I've been telling the brokers, get the accountants to put the name on there. That way we don't have to look at extra documents. And if we look at less documents, less likely something's going to go wrong. So yeah, that's for me. And I noticed a few questions have come through. I'll be happy to take questions.
Thanks, Brendan. Let me see what we've got here.
Yes, for bonuses, yeah, it's average of the last 2 years or the most recent year. Casual income not shaded at NAB, and we will annualize for the full 52 weeks as well. So it's quite generous there as well.
Some good feedback there for you, Brendan.
Thanks for the feedback, mate.
Credit related.
Yes, with temp, I think there's a few questions. Temp precedence still at 70%, but it is under review. A lot of those clients are paying us back, so yes, you could possibly get some changes moving forward. Return to work policy, Iggy, I still have time? I think I do.
Yes, yep.
Yep, so return to work, as long as the client's been working with the employer for over a year, we do not need a letter saying they're going back on this date or this income. You can pretty much key in what they tell you, and we'll take your word for it. So if a client's, let's say, let's say someone's on maternity leave, they've been working there for a couple of years, you say she's going back 3 days a week, we'll use 60% of the income. You say she's going back 5 days a week, we'll use 100% of the base income. The letter was something that we used to ask perhaps a few years ago. Officially, no letter is required. We'll ask you for an old payslip from before they went on leave to then verify their income level. Now, between the time of the application and the time they go back, we'll want to know how they're going to make those payments. If they've got savings, that's fine. If they've got government payments, perhaps partial payments, we'll lump that all together, and you just got to have enough income on there.
Maybe
Hey,
time for
Marjan,
one
if
more,
you could just
Brendan.
say hello.
Just one more, mate. There's one from Tanya here around NAB doesn't offer the construction loan. How about the first home buyers grant construction?
Yeah. So you can do those. So we're doing the I saw another question there. 98%. You can do those on the guarantee. You can do construction loans as well. It's a little tricky. You just got to be careful. I'm telling brokers. Officially, the bank doesn't say there's going to be trouble, but customers like those generally they're already tight. The budgets are tight, and if they're going to construct, you got to have to talk to them about how they're going to manage rent and construction. A lot of construction delays all across the board. And generally with the home guarantee, customers are not in great financial positions. Otherwise, they probably wouldn't need the guarantee. So just make sure you're having those conversations. We'll still do the deals, but we don't want to put anyone in financial hardship where they're stuck with the construction for a few years. And we're doing all the deals, but just have those conversations.
Brilliant. Thank you so much, Brendan. Great update. If we have any additional questions, we'll make sure we get those through to you.
Yeah, perfect. Thanks for having me. See ya.
Yeah, has Jason joined? Jason, are you there?
Hello, Nathan. Can you hear me?
Yeah, I can now, mate. How you going? Just give me a sec. I'll get your slides back up.
That's okay. My apologies to everyone. Thanks for your patience. I'm having a little bit of a mare here, so please bear with me.
I know you're having some challenges, Jace. Can you see my screen?
I can, yes. And apologies. I've just had to dial in. I'm having some team issues here in the office as well. So thanks, everyone, for bearing with me.
Okay,
I think we should hopefully be good to go.
Yeah, we are now. Thanks, Jace. Over to you.
Thanks, Nathan, and thanks, Nicole, for organising the lunch and learn. Fantastic, and hello to all you Aussie brokers out there and lending brokers. I hope all is well. Just for me, I just wanted to give you a bit of a quick update, snapshot as to where Suncorp are at. I know I probably spoke to a lot of the brokers out there already about some of the key changes and substantial changes that are happening at Suncorp at the moment. A lot of it's exciting stuff. And if I could just jump over to the next slide, please. So I'll start by adding this slide. This is something that we are deeply proud of. Suncorp, it's industry recognition. To be Bank of the Year for 1 year is an achievement. To be 5 years in a row, ultimately, it just shows where Suncorp are, what we are doing for our customers, and how we are continuing to improve and offering a really fantastic offering out there in the market. Next slide. Bit of a snapshot here, just in relation to some of the current offerings. Well, I won't go into rate because that's obviously a very dynamic space at the moment. Some of these offers have been around now for a substantial amount of time. Package fee waiver for the life of the loan. So ultimately, all products in the residential space for Suncorp, there's no upfront, no ongoing fees. And as you can see there, we've got a range of different cashback incentives for loan amounts above 750k. 3k cashback, and then that jumps up to 4k for loan amounts above 1 million. And also, as you can see there on the third pillar, we've also got a solar home bonus as well. So customers with eligible solar panel attached to their property, be it their owner occupied or investments, will be eligible for $3,000, and that's for loan amounts 500k or below LVR 90%. Below. If I can just move over to the next slide, please. The biggest change, I think, with Suncorp at the moment, and the one that I'm most proud of, and particularly some of those brokers who are online at the moment who have dealt with Suncorp for a substantial amount of time, and I've been at Suncorp now for 10 years. Historically, the issue we've always had with Suncorp is inconsistent SLAs, the peaks and troughs, the campaigns, the lull periods. What we've got now through what we call Sunlight is ultimately, it calls out 48 hours there, but ultimately at the moment a 24-hour SLA. So brokers are lodging deals, and those deals are getting picked up in business hours. Historically, we'd always talk about days, business days for that deal to be picked up. People are lodging deals of an evening, and the next day they're getting a response and outcome on that particular business day. So the reason why we're able to do that is ultimately when it calls out there the sort of low risk application. So where LVR is 80% or below, and the DTI is 5 or below, lesser risk profile with those transactions. We're able to pick them up and to move them on super quickly. But because we're able to move on those lower risk applications super quickly as well, the business that actually falls outside of that category, so LVR may be above 80% or the DTI may be a little bit higher, we're still able to pick them up in 24 to 48 hours and give you the outcome and give the customer the outcome as quickly as possible. Next slide. Again, here's the criteria in terms of that business that we can pick up and we can light touch assess and we can get you that response within 24 hours. Again, as I mentioned, 80% or below LVR, debt to income ratio 5 or below. Obviously, servicing has to be evident there as well. There is some exceptions to that, as you would imagine. More complex transactions in nature, be it more complex self-employed, guarantor deals, non-resident borrowers, and also construction loans where may potentially need credit to sign off on that particular transaction. Next slide on that one, please. So, Sun Verify, what that is, and one of the pain points I'm still having at the moment, particularly sort of can slow down us issuing out loan documents, it's just that VOI, what we call the old KYC VOI process. The reason why I wanted to flag this is we actually newly have introduced a Sun Verify process. There is a video there, which is on our broker website and can be available on YouTube as well. Basically what that does is it allows the customers to complete the verification themselves by sending a text message to their smartphone, rather than you having to manually collect this information and then provide it to Suncorp and complete the proof of identity form and the VOI form. It's just another option to be able to provide to the customers, for them to be able to complete that. You don't have to do much. All you would do as the broker is get an email saying that the ID verification is completed, upload that into Apply Online, and from Suncorp's point of view, all the KYC VOI requirements are sorted out up front, and then you will no longer need to worry about having to complete those pieces of ID. It's all done and dusted for you. So again, it's more just giving you a suite of options. Of course, you can refer back to the manual process, but we have now a digital process which we'll be able to offer your customers as well who need one. Next slide, please. Another substantial change, which to all the brokers I speak to, I bang on about quite a lot, probably to the second of me talking about this, is the simple self-employed process. Essentially, the crux of what this particular product is, we call it a basic self-employed process. If we have 2 years notice of assessments and it falls into that particular criteria you can see on the screen there, so LVR is 80%, the maximum decrease in the income is less than 20% compared to the previous year, we can essentially treat this like it's quasi PAYG. So you don't need to provide any additional validations. It's just a 2 years notice of assessments. What we will be able to do ultimately is turn around that business super quickly. So again, that's still 24-hour SLA will still be applicable. And we don't need anything else, 2 years notice of assessments. What I would say is, don't give us more information than either, because we have to look at it. So simply give us a 2 years notice of assessments. The assessors will straight line average the two, and then we will use that for the income assessment. Nothing more in terms of income validations is required. And what it does is it allows us to separate those super easy self-employment transactions while also freeing up space then for more complex self-employed transactions where we may have to refer back to the 2 years financials and get more information, bank statements, etc. in relation to that. Next slide, that one, please. Fast refi. Again, another thing that I'm sort of trying to speak to all my brokers about. As everyone probably on the line is aware, retention and banks' retention at the moment is uber aggressive and competitive. What I like about the fast refinance is it predominantly moves away that retention risk from you as a broker, allowing you to be able to go ahead with the fast refinance process, not having to get the customer to engage the outgoing financial institution, allowing us to complete it as a fast refinance. It means that we can settle the refinance generally in days, as often opposed to weeks with a regular refinance. And it also prevents the customer getting that call from their outgoing banks 2-3 days from settlement, and that bank being uber aggressive in what they offer the customers. And for you as brokers, it gives you a little bit more confidence that you know that deal that you are potentially bringing over to Suncorp will settle. We don't have to worry about that retention risk. There's also a lot of information on Apply Online in terms of working out the balances required to complete the fast refi. It's intuitive on Apply Online, and there is plenty of resources as well. So what I would say is the brokers who aren't using fast refi, give me a call. Let's work through it. Let's have a chat about it. Because really, we need to probably make this the way moving forward, because the deals on my desk where it's a standard refi and banks are trying to retain the customers and giving them cashbacks and all kinds of incentives, we want to ultimately avoid that from happening for you and your customers ultimately. Next slide, that one please. And that's basically it for me. I just wanted to really just go through a couple of key points from Suncorp. I'll probably finish off by saying, look, I really appreciate the ongoing support that Aussie has shown to Suncorp. And Lindy, it's duly noted. And please, what I like to do as a BDM, I'm here, so please feel free to reach out. Always happy to have a chat, always happy to help in that pre-lodgement and post-lodgement space as well. And even if you want to just give me a call and say good day, I'm always down for a chat. So thanks everyone for giving me a few minutes of your time.
Excellent. Thanks, Jason. Really appreciate the update and your time today. Mate, in the interest of time, we've just gone a little bit over today, so I might just, any questions that we have in the chat, I might just get them forwarded to you for you to take up with the individual broker themselves, each, if that's okay.
Yeah, absolutely. Thank you.
Fantastic, mate. Thank you. Team, just in closing, I'd just like to thank all our lenders for taking their time to join us today. Certainly a lot of content and information that was shared, which was fantastic. That concludes our session 1 for our September Lender Lunch and Learn series, and we'll be back again for session 2 next Thursday. As mentioned earlier, please don't hesitate to reach out to any of our lender BDMs if you'd like to chat through scenarios or ask further questions. Have a great day, take care, and we look forward to seeing you all again next week. We've just on the screen now, we've got the MFAA and FBAA points for your reference. I'll leave them up for a few minutes for you to take them down.